It's DeFi Wednesday for Brave New Coin. Let's do a health check, a post-mortem. See who's still alive, who's kicking, the winners, the losers. We'll start with TVL, which is down from 70 billion on ETH to 40 billion on ETH today, 45 billion today. Don't even get me started on BSC, PancakeSwap. That is a dumpster fire. You're asking to lose all your money if you're on there. Keep that in mind. Those high returns are like a moth to a flame for some people, but rugs aplenty, assuredly. Rug Emporium, CZ's Rug Emporium. DEXs have the highest month on volume ever at what will be 150 billion in volume. So it's hard to be bearish. Uniswap, Sushi, Curve, Balancer, BNT. This stuff is working despite ETH sort of collapsing under its own weight briefly, despite the lending and borrowing services, specifically AAVE and Comp, trying to liquidate as many people as possible on that down move. You know, the move goes down, loans are under collateralized, people are panicking, gas goes way up, people can't get their loans collateralized fast enough, loans get margin called, price goes down more, and then you get this margin cascade. So that's what we experienced a few days ago, and that definitely played a role in this DEX volume here. Anytime you see high volatility, obviously you're going to see larger volumes. One of the hidden stories about all of this is the Maker liquidations, the CDPs on Maker, were almost unscathed. They had less than a billion, I think, in maybe less than 1 million in total liquidations. I think it came out to like 650 million or 650,000 from what I could see. So they had hardly anything on the liquidation front. So good for them. The real catalysts for this down move were AAVE and Comp, and in the grand scheme of things, you know, 200 million in liquidations isn't really that much, but I think it was when it happened and the fact that some of those loans just couldn't get saved because of gas fees. So 200 million being liquidated all at once is kind of an issue for price when everyone else is already selling. You know, momentum wasn't on the side of those loans to be saved. Here's dominance, Bitcoin dominance, still 40 something. You know, I don't think that many people take dominance seriously unless you're just anti-BTC, because I can make a coin, you can make a coin, everybody can make a coin, and it'll be included in this calculation. And that's a lot of what we saw here. It's a carbon copy of what we saw in 2017 as far as ICO wealth being created out of nowhere, right? So it's a lot of the same. And the crazy part is when the bear market hits eventually, I don't know when that'll be exactly, but when it does hit, we'll get dominance returning to BTC because all of this wealth is not wealth. You know, we'll find out the emperor has no clothes when the tide comes out. That's how it usually is. And old reliable BTC will still be here. So that's why you see dominance on BTC creep up again. If you look at the DeFi perp, now this is really a barometer for everything. We were basically at all-time highs, immediately dropped 70% on everything across the board. It was a fire sale. Nothing was left untouched as far as I can see. Everything pulled back at least 60%, some of it over 70%. And to really understand what this looks like, you have to look at it on linear scaling. All my charts are always on log, so, you know, it doesn't look so bad, right? But on linear, it's pretty clear what kind of devastation this was as an event a few days ago. But the good news is a lot of these charts are still on the neutral side, some of them on the bearish side of neutral. Most of them are reminiscent of this in that they have pulled back to their ranges that they were previously in. They're slightly below or at the 200-day moving average, and they're sort of back in this safety net of consolidation volume. Now we'll see charts that don't look like this, where they're still below their ranges, and those are the most at risk for bearish continuation. Matic is probably the only chart where you couldn't even tell anything happened, and it's basically back to all-time high. Kind of nuts how that happened. It was up 110% in a day or something like that. Maker also, Maker also did extremely well on the bounce. way above the 200-day moving average, way above the cloud. So Matic and Maker definitely stand out as far as on the bullish side of neutral, right? These could still set up for some sort of downslide still based on trend through the cloud. How this works is if we're above the cloud, we're bullish. If we're below, we're bearish. If we're above the 200, we're bullish. And if we're above both, we're very clearly bullish. And we bounced on the 200, broke through the cloud briefly, came right back up. So Maker's kind of alone on an island in that it's getting ready to be bearish once it flips below this cloud, but it's currently fine. You know, ETH kind of in the same boat, ETH-USD, where it's back above the cloud again. It looks okay. Link, another old reliable, still in this pitchfork. I don't have the 200-day moving average on here, but it's back above the 200-day moving average, back at this median line of this pitchfork. Again, a pitchfork is a rate of change projection. You pick 3 points, you put it on price. You curve fit it because you say, okay, does this fit? Does this look good? And my answer is for this, yeah, it's looked good for years. 2019, 2020, buy zone, sell zone, buy zone, sell zone. Currently the sell zone is above 70, something like that. So it's still a 2x from here. This may hold at the midline for an extended period of time, as it has in the past 4 months. But ultimately, the sell zone is always going to be there as a projection on the chart. This bull trend is at risk once we break below the cloud, which would currently be lower lows, basically. If any of these charts close on lower lows, it's kind of game over in the near term, even with a bullish divergence. You know, if you get a lower low here on a bullish divergence, it just is likely still game over. You know, that's at that point, you're seeing further weakness after a 70% drop, sorry. That's just problematic for anything. So definitely watch for that. But Link is among the strongest of the survivors so far. And surprisingly, Melon, which is Enzyme, the non-custodial portfolio management tool that we use at Techemy Capital, I'll talk about it at the very end, but Melon has done well since the drop as well. On the daily, it's above the 200. It's back in-ish the cloud. Not a clean trend cloud-wise, but it is back above the 200. Some of these pairs like SNX at the 200, slightly below the cloud, just like AAVE, it was ready for all-time highs. AAVE was at an all-time high the day before the crap hit the fan, and it dropped 70%, right? This wasn't oversold at all. This was ready for bullish continuation, right? This had just consolidated for 3 months and was ready for a party and was sort of at the whim of market forces, really. This looked great. It was even hitting all-time highs when everything else wasn't, you know, but ultimately King BTC told you that, hey, be careful with these altcoins because weakness or strength in BTC correlates highly with weakness or strength in the altcoins and DeFi. So SNX has some bull moves yet to recover in order to continue its journey. It had a falling wedge, it had an inverted head and shoulders, it had a mean reversion already, it had bounced above the cloud. You know, again, like AAVE, it looked like it was ready to go, but the market had other plans, and here we are. So now you have to kind of deal with what is this going to look like going forward. And again, you don't want lower lows here. If you get lower lows sub 11 on SNX, you know, for me, that's problematic. The best case really is for this to just consolidate at the 200-day moving average, 1 month, 2 months, whatever it is. Let the trend metrics sort of slope downward to give SNX a chance to recoup those losses from the other day. But Matic and Maker are definitely an outlier in that they bounced basically the next day, right? We had like a 50% drop and then a 20% drop on top of that. And Maker and Matic immediately bounced back. There's some arguments for the swiftness of the down should be met with swiftness of the reversal. For some of these, I'm not so sure. So SNX is problematic. AAVE still looks okay. It's more neutral than bearish. It's above the 200. It kind of stabbed at that 200 and held as support. But you're definitely more confident with anything up here. Now, all of these charts break any sort of bullish continuation patterns. I mean, this was setting up for cup and handle, inverted head and shoulders, all sorts of stuff that looked good for up, and all that's just, you know, negated at this point. So as long as it's above the cloud, then I'm happy with AAVE, right? Because there's nothing else here. It's just a giant mess. Comp had its inverted head and shoulders break up and then immediately sell down Much like AAVE, it's in the cloud above the 200. So this needs to pull back up to 600, 610 to have a fighting chance into June as far as more bullishness. And it probably just needs some time. You know, again, you don't want to see this droop back down to sub 300s. You don't want to see any slow bleeding. Slow bleeding is the worst thing you're going to see here. Just like this slow melt up, you know, this is the most bullish thing you can see. And you don't want to see this. You know, if we get, just like we did here, we had this drop and then slow bleed, right? If you start to see that, any hint or whiff of that, and that's extremely problematic for bullish reversal or bullish continuation. The worst thing you can see is complacency. You want a high amount of emotion in order to save this. In this case, it was fear or liquidations or whatever. You want people to buy the dip enthusiastically and feel like they got a good deal, right? But once the slow bleeding starts, it's often hard to stop. Uni had a pretty strong uptrend going for it on the daily since mid-January. Broke below the cloud, below the 200 moving average briefly. Back in the cloud now, back above the 200-day moving average. Still needs time. You know, this might take all of June in order to recoup. But we will know by June, I'd say June 15th, we will know if this stuff's in a bearish continuation mode or if it's back into a bullish reversal mode. Sushi also was basically on track to set all-time highs back above the cloud again briefly and sold off extremely quickly to sub 7, and now it's below the cloud, below the 200 on the 12-hour. You're getting a bearish 5200 cross for the first time ever on the 12-hour. So this probably needs some time. You know, you could argue for some sort of expanding wedge or something. I don't know. It's just a giant mess right now. You know, along with everything, it needs some time. Give it to June 15th to really make a decision about trend. Curve is one of the most that's at risk because it consolidated since late January and went nowhere for 3 months. So it didn't actually have a bullish continuation before we dropped 70%. And it's the farthest below its 200-day moving average, the farthest below the 12-hour key June. So this needs to pull up to 260 plus to have a shot into June. It does not look pretty for curve. Balancer, same thing. Does not look pretty. Anything below 48. You can see you're getting that 5200 cross on the 12-hour. So this stuff still has a ways to go as far as mean reversion is concerned. It's a good start, and if BTC and ETH can continue their recovery, if Maker and Matic can continue their recovery, then that should lead the way for a lot of these, which have a ways to go in their mean reversion. BNT still looks rather okay. This is the daily cloud again. We'll know by late June, mid-June, you know, if we're above the cloud or not, right? So just give it some time. This took previously 3 or 4 months below the cloud to figure itself out. And you got your cross recross, right? On the 5200 here. Bull cross, bear cross, bull cross. We'll probably get a bear cross here. So this is going to take some time for sure. 1 inch also pretty far below. This is a 4-hour cloud. There just isn't enough data on 1 inch to look at higher time frames really. But you want 1 inch back above 380, whatever that you can see this range boxed off here. 380 is great. 5 is even better. That's the middle of the range. If this can hold back at 5 for an extended period of time, it has a decent shot at bullish continuation. But you definitely don't want to see any sort of cloud denial over the next few weeks as this tries to pull up. ZRX also got hammered. It didn't really go anywhere at the highs and fell way below the cloud to like 58 cents from 230. Just a massive nuke. And again, into June, July, we'll know. You know, are we above 160, 150 in late July, late June? That's where you're looking at this point. Just need some time. Now it did stab into a previous local high, but it doesn't look great here for sure. Ren also, I've kind of given up on Ren. It had this falling channel characteristic below the 200 now, way below the 200, and probably needs 2 months to figure itself out. But again, you'll know if it's above the 200, above the cloud on the daily chart, then it's go time. So it's got lots of time to figure itself out. Band same story. Below cloud, below 200, within the previous range, but into late June, we will know. You know, this is across the board. We will know how bullish are we going to get. And this is the BTC and ETH recovery I mentioned on Twitter, but we want to see BTC to 45, ETH to 3K plus, which would be a complete bullish reversal on the 4-hour. So we should know pretty quickly, you know, are these trends going to lead to low time frame bearish continuation on BTC and ETH, or will we see some sort of swift reversal? So I definitely watch for that. Lastly, I'll mention the enzyme stuff. You can send ETH or USDC to either of these portfolios. This is just ETH and BTC. You can see AUM allocation, trades, deposits, withdrawals, no mins, no max. All this is done through DEXs. I don't touch any of the money. It's all in a smart contract. The DeFi fund has most of the coins I just mentioned in the video. And also say that this month I'll take credit for this. On the ETH-BTC fund, we outperformed any of the high AUM funds by quite a lot. So I was selling on the way down, and that's really what saved the performance on that. And it's also the best performance since inception of all the high AUM funds. So it's done quite well. And yeah, there are fees, 2 and 20 associated with this. A lot of that pays for gas. Some of that pays me. So keep that in mind. This isn't like a free ride for anybody joining. But hey, if you just want to see what I'm doing, you can look at all the trades I make. They're all transparent. So that's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.